Welcome back, everyone. This is Thomas Triple T Tie with another new bullish crypto analysis. Before we dig in and take a look at the charts and analysis for the crypto and Bitcoin and the equities market, remember this is for entertainment only and not to be considered as financial advice. Additionally, I would appreciate it very much if you could help spread my easy to understand analysis to help others by smashing the like, ringing my bell, and hitting subscribe if you haven't, and then sharing your thoughts and questions in the comment section. So with that, let's dive into part one of the two-part daily series on the markets. This is all charts and analysis, and the second part is the macro news that may impact the market. So let's do the first part, and I will double check my monitor to make sure that my screen share is working correctly. My apologies to those who saw the last Solana weekly analysis, and I somehow something happened with the keystrokes and it didn't switch the screen properly or switch back or something. Anyways, sorry about that. So let's dive in and take a look at the crypto market heat map right now. Bitcoin 31.2. It dropped as low as like 30.4, I believe. Dominance 41.74. It dropped 9%, just over 9%, and it was even more earlier. Luna crashed big time. It came into the low, I believe it was in the low 40s, 43.15. Ethereum 2.3K dominance, still pretty strong on the dominance. 19.53. I would argue that Ethereum's dominance through this major correction has been stronger than Bitcoin. I don't mean by percentage, I mean by how stable it is. So ADA at 64 cents is crazy, dropped 14.6%. Overall, extremely red. You can see some of these deep reds here. So look at SHIB. SHIB dropped 17%. This is why it's important when you have when you hold altcoins. Some altcoins at certain points in time, when Bitcoin drops to a certain level, altcoins will just crash hard, and so it's really important. Luna has a different story, and I'll cover that in a separate video. But really tough day for the crypto market today, and I don't think this is the bottom yet. We have a little bit of pullback after hitting Bitcoin hitting 30,400 roughly. We got a bit of a pullback to 31 something, but there's more pressure coming. So for those of you who have followed my entry levels, not financial advice, but I mentioned on Twitter that you might want to lower your entries, the percentage allocated to the lower entries. Here's the zoom in here for you. Crypto market cap dropped 10.24% to $1.42 trillion. That's huge. 10 point something percent. That's a lot in 24 hours. So really rough. Outflow, a lot of outflow from the crypto market. And outflow just means money going out. Here's the fear and greed index. We are now at 11. We rarely go into the 10, 11 area. We drop from 18 to 11 and extreme fear. So not financial advice again, but really good opportunity to start accumulating if you haven't. Here's the equities market in the U.S. We see that technology, just blood bright red. Look at that. And we're not talking about small companies. We're talking about major companies. Technology, consumer silicon. Look at some of these tech companies. Microsoft down 3.69%. Apple down 3.32%. Nvidia 9.24% down. TSM down 4.73%. Google down 2.23%. Facebook down 3.71. Amazon down 521. Tesla down over 9%. That's crazy. Oh my goodness. Like, we are blood red everywhere except for the sector that probably is hanging on pretty decently is consumer defensive. You got Walmart up 1.17. It's pretty muted in this area. Some greens but overall muted. Financials just blood red. You got healthcare in this section right here. Drug manufacturers. It's you got like a couple big green spots here, but otherwise it's red and muted red. Industrials mostly bright red, some muted areas in specialty industrial machinery, real estate bright red, energy bright red, basic materials bright red, utilities muted. So we got a few sectors that's like hanging on, but overall very tough market for the U.S. equities market. So let's see here. Let's take a look at the TradingView chart here. This is 30-minute time frame, 7 days worth of data. Each column, U.S. markets, and the left column, middle column is the European and Stock 600, and the third column here to the right is the Australian and Asian markets, and then we have our watch list on the far right here. So let's go through the watch list first. You see that Nasdaq down 3.98%. So this down is on top of the previous down. So cumulatively, that's not good. SPX down. What is that? Let me look at here. 3.20%, and then the Dow Jones Industrial Average down 1.99%. Volatility index, the VIX, like 34.75. That's extreme. That's pretty extreme. 30 is the start of the extreme. So 34 is 34.75, almost 35. It's pretty bad, and that's up 15.10%. The Dixie 103.72 is still hanging on to its high range, 20-year high range, I believe. Crazy. That's up 0.07%. The U.S. 10-year yield, that's down roughly 20 basis points, or negative 0.20% at $3.03. And let's see what else. Oil, we're still above 100 on oil, but that's down. It's down 7.36 at $102.35 per barrel. Gold is also down 1.58. Silver is also down 2.51. So you probably are thinking, if risk on assets are tanking, well, everything's tanking, almost everything's tanking. But if risk on assets are tanking and gold is tanking, gold is typically viewed as a hedge against, gold is risk off. So if gold is tanking and risk on assets are tanking, where's the money going? Well, more than likely it's going to be held in dollars, U.S. dollars. And we'll see that in a minute here. So as much as some people in the cryptoverse hate the dollar, the greenback dollar, hey, like I said before, the dollar is still the dominant money in the world. So don't be hating on the dollar. If you're hating on the dollar and the dollar drops and everything else drops, we're pretty much screwed. So, all right, let's go to the euro. Let's take a look at the currencies here. Euro versus USD. Euro is weaker by just a tiny bit, down 0.01 or 1 basis point, and that's trading at $1 and roughly $1.06. The pound is weaker than the dollar by the same amount, 1 basis point, and trading at $1.23. 103 cents roughly. The dollar is stronger than the yen, and that's by roughly 8 basis points. It's trading at $130.37 roughly. So dollar's holding strong, and if people are selling out of these other assets and it's not going into gold, it's going towards the dollar. So let's take a look at the U.S. markets here as far as the trend lines. We have a Bitcoin here over the weekend dropped and just like drop. It's like an arch, and then it's got a bit of recovery towards the end of the U.S. U.S. market closing here. So it pulled back a little bit, and so look at Nasdaq trend here. On the 7-day range, it's on the lowest end. So, and you see here, market open, it dropped. So, positive correlation with Bitcoin and Nasdaq is holding. For the S&P 500, is also at the lowest point in the 7-day range, and it dropped after market open and kept dropping. And positive correlation with Bitcoin is holding there as well. The Dow Jones Industrial Average is on its lowest point, lowest level in the last 7 days. And after the market open, it pretty much chopped downward. Dixie here, it's still near its top range in the 7-day. So it's holding really strong at $103.72 roughly. And you can see here, what's interesting here is the dollar after the market open, it dropped along with the Bitcoin and Nasdaq and S&P 500, and then it pulled back. So negative correlation with Bitcoin, Nasdaq, and S&P 500 is not holding because they're all kind of trending the same. Like right now, after it dropped down, it even pulled back up at the same time, similar time as Bitcoin. So negative correlation is not quite holding there, but it did hold like part of the weekend here. You see that? Dixie went up, and then Bitcoin dropped, but then Dixie dropped, and Bitcoin continued to drop, and Dixie went up before the market. So if you look at an overall trend, part of it, negative correlation held, but part of it didn't. So, but if it's not, eventually it will. It comes back to what is done on average. The U.S. 10-year yield, it's still, it's more like in the middle range of a 7-day period. But if you look at zoomed out a little bit, it's still on the high end. After the market open, the yield dropped. But 3.03 on the 10-year yield is pretty decent yield there. But and in case you didn't know, the yield moves opposite of price. So if the yield drop here, that means price increase. Price increase because people bought the yield. So more demand for the yield, price increases, the yield drops. So probably right around here, where the yield was like 3.18, there was more demand for the yield, so the people bought, and then price went up, yield dropped. That's what happened. All right, let's go over to the European markets. We see UK 100 7-day trend down its lowest bottom range here, and it's dropping right along with Bitcoin over the weekend and today. The DAX from Germany is very similar to the UK 100, down low in its 7-day lowest period, and following Bitcoin over the weekend, even though they're not open, but you just look at the trend. CAC 40 over in France, similar situation, bottom of the 7-day range, dropping in its current session here. The Stock 600, similar, bottom of its 7-day range, dropping its current session. Over here, so European market, similar to the US market, just downward slide. Let's go over to Australia. Here's the STW index here. 7-day on its lowest range, dropping in its last session, a little bit choppy, not too big of a drop, but a little bit choppy, but still trending down. On the Nikkei 225, you see that it's on the lowest end of the 7-day period and dropping pretty hard in its last trading session. KOSPI from South Korea, same situation, lowest period in the 7-day, dropping down in its last period. Hang Seng HSI from Hong Kong, it's looks like it's closed right now, but in its previous period, it's down at its lowest in the 7-day period. The CSI 300 from Shanghai, China, lowest period in its 7-day, also dropping in its last session. So overall, what do we see? All these major indexes, equities indexes, are dropping. And while the dollar is holding strong in its upper range, and the yield was on its really like decade high up here, or like I don't know how long ago, but it's in really high range and finally started to drop. So very, very, very tough across the board, across the world. And this is why it's important to track to see, because some areas will do different things, but eventually if they all follow a certain pattern, you got to pay attention to that. So smash the like if you haven't, to help spread my analysis for others, to help others like it helped you. So, and then ring my bell to get notified, and subscribe if you haven't. And please share your thoughts and questions in the comment section. I appreciate your time, and I'll see you in the next macro video, part 2 of the market analysis for the news. Peace.